Hi everyone, I'm excited for this next installment in my Q&A with Wall Street series. Today I'll be doing Intel and their conference call with analysts, so let's get right into it. Starting with Deutsche Bank, Ross Seymour, first question asking, do you expect the first quarter to be the bottom in absolute dollars through the year? So if you're not aware, Intel's fourth quarter was absolutely dismal. Revenue growth decreasing by 30%, excuse me, over 30%. And so this analyst is asking, and then Intel forecasting for a first quarter of even moderately lower revenue. And so the analyst is asking, will that be the low for the year? Will this next quarter, Q1, be the low point for the year? And the CFO, David Zinsler of Intel, jumping in to answer the question, saying, we're not providing guidance for the rest of the year. But I did say that the first half is likely to be seeing these inventory corrections. We're expecting Q1 to be the most significant inventory decline at our customers that we've seen in recent history. Moving on, the CEO jumps in and says, we do believe that we will see recovery as they have made those inventory adjustments and will see the business be stronger as we go through the year. So, without directly answering the question and saying yes, the first quarter is likely to be the slowest quarter because they're expecting the second half of the year to be better. So maybe the second quarter is even worse than the first quarter, but they expect that the rest of the year to improve as their customers, think of like Dell and HP and Lenovo, these computer sellers that use Intel's chips inside the PCs that they build, they've got record amounts of inventory that they need to get through before they reorder more Intel chips. And so that's what Intel is waiting for the customers to get rid of to sell through that inventory they have so that they can buy more Intel chips and build newer PCs. That's what they're talking about here. That's what they're hoping that the second half of the year, because there's going to be so much inventory decline in the first quarter, that closer to the second half of the year there will be a rebound. And then Ross Seymour follows up and asking about the gross profit margin of 51 to 53% that Intel was talking about in the investor day. What kind of sales is it going to take to get back to that? Do you have to have 17 or 18 billion dollars in sales to achieve this kind of gross profit margin? And so the CFO first jumping in and saying, yes, revenue is the most significant impact to gross margins, and then adding it's a function of some significant inventory burn, so it's not necessarily a reflection of the demand in the market. In the first quarter, we're going to have about a 400 basis point impact on our gross margins just from underloading because of the demand softness. So, because their customers are not going to be ordering from Intel, Intel's not going to be producing at that high capacity, and the business is not was not built for this right now, right? They weren't expecting this kind of decrease in demand from its partners. And so now they're, maybe using 50 or 60% of their manufacturing capacity. And so that's leading to a lot of overhead costs that's not being split across greater number of units, and so that's causing gross profit margin to decline. What they need is higher unit sales so that they can spread these costs out across more units, and then the gross profit margin can expand as they increase sales. The problem is that sales are not expected to rebound in its next quarter, maybe not even in the second quarter. Management, as you saw earlier, was saying that they expect demand to recover in the third and fourth quarters of 2023. And even that forecast has come under scrutiny by other industry participants who are saying that Intel's forecasts for PC unit sales in 2023 are too optimistic. And CFO saying, I feel very confident we will get back to 51 to 53% in the medium term. And in the longer term, I feel very confident that we will get back to 54 to 58%. So they're a far cry away from that right now, reporting gross profit margins in the 30% range in its most recent quarter and forecasting even lower gross profit margins in the next quarter in Q1 of 2023. However, reiterating that they feel confident that they can get back to 52% at the midpoint in the medium term and then expand on it from there. So they've got plans. They're undertaking a multi-billion-dollar cost-cutting program to optimize the business in this moment of significant headwinds. So they're taking the opportunity to right size the business, but it remains to be seen when and if it bounces back to these levels. And looking at these figures, looking at these headwinds, you can understand why Intel's stock was down so much after this quarter, after the fourth quarter announcement was released. All right, so that's all I've got for this Q&A session with Intel stock. I hope that provided some insight into the difficulties the company is having, and I hope you'll tune in next time for another installment of the Q&A with Wall Street series. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.